Hi traders, welcome to this Forex trading week ahead analysis video with me, John, Senior Market Analyst here at 𝖢𝖥𝖣yi. We're going to be taking you through the Forex week ahead and some analysis and charts to watch, and actually some really interesting charts to look at going into this trading week. So what have we got coming up this week? After that crucial week from last week, we've now got some services and manufacturing PMIs coming up out of Europe, the UK and the US, which is going to be very interesting to see. We'll see if services PMI continues to tick up here in the US. We've also got two central bank announcements this week. We've got the RBA expected to hold interest rates, and we've got the Swiss National Bank who are expected to cut interest rates. Now, an interesting bit of data we've got coming up towards the end of the week, core PCE price index. Obviously, that was a factor in the FOMC's recent rate cut. They talked about the potential for seeing core PCE, which is their main inflation indicator, coming in a lot lower, and they want to try and support essentially the market as well in terms of unemployment rate continuing to rise in the US. So yeah, very interesting data to watch coming up this week. We've also got the Federal Chair Powell speaking this week, as well as Governor 𝖢𝖣yiِ, and we also have Governor Macklem speaking. So going on the currency strength meter this week, what can we take a look at? Well, we can see there's been some dramatic changes in the market. The US dollar remains a weaker currency. We saw most of the other currencies perform pretty well against the US dollar this week, apart from the Swiss franc and the Japanese yen. So the better performing currencies were the Australian dollar and the pound, as well as the euro. Worst performing currencies was the US dollar and the Swiss franc. So starting to see a real big change here in the Swiss franc, and this is something that I like going into this trading week, and I'll talk about that later in a video this week, talking about Swiss franc again. But looking at the US dollar index at the moment, you can see that we're trading back towards those 101s. We're hovering below it at the moment, and the market has closed at this sort of demand zone here, but you can see we're still closing above these lows. So I think if we break this weekly high, then it could influence a little bit more buying pressure. Breach above 102s would obviously be a little bit of a change in sentiment here, and we'd probably see higher prices up into the 103s or even the 104 spot 25s. A break below could see price come towards the 99 spot 75 handle. Going on to US dollar Japanese yen then. So we were talking about a potential reversal here last week because of the commitment of trader reports. They were telling us that commercials and non-commercials were in extremes, and the non-commercials in particular were shorting, buying the Japanese yen at aggressive levels at this 140. And now we're starting to see that sort of takeoff of the market here. So there's a potential for dollar yen to continue to pull back in line with that. Similar situation here on the Swiss franc, apart from it's the different sort of side of it. We've actually got commercials that are shorting Swiss franc at very aggressive levels at the moment, and that's quite interesting considering where we are in terms of the market and where we can see us at the moment in terms of being at that 0 spot 84 handle. Non-commercials though aren't at extremes, and they're not really buying or selling the Swiss franc at the minute, which is interesting. And we do have a Swiss National Bank interest rate decision coming up, so something to consider here. Finally, then, let's talk a little bit about gold. I wanted to kind of get to gold quite quickly because there's a lot to talk about here, especially when we look at it from the commitment trader side of things. Now, obviously, I've been heavily talking about the fact that there's not a top in gold yet. I don't see a top in gold yet, and it was all down to the fact that the commitment of trader reports weren't at any significant extremes. Well, we've got one extreme now. The non-commercials are now buying at levels we haven't seen since March of 2022, where we saw a drop from $2,000 down to $1,600. The only difference here right now is the fact that the commercials are still not selling as aggressively as they were. They are technically at extremes. They are at very, very high levels at the moment. But do we need to see another leg higher, another push higher that will force commercials into shorting even more aggressively? That's what I would really like to see. But would I want to be long gold now, basically? No, I don't think so. Even though we've got this really strong price action here, market broke out of this consolidation, I think that right now this is a very overextended level. if I said to myself, where do I want to be buying gold? I want to be buying gold back towards $2,500 or at least $2,450, where we have that sort of range high. That would make a lot more sense to me at the moment. So very interesting data this week. I'll try and keep you updated as best as I can. I am away on holiday again this week, so I'll try and keep you up to date. And if I can, then I'll speak to you very, very soon. So thanks, guys. Have a great trading week. Speak to you soon.